Very good evening, everyone. I hope you all enjoyed the video and welcome to a new series of the India Factoring Chat Show. Factoring, one stop solution for your global aspirations. I'm Kaustubh Bolkavtekar from the Business and Relationship team, your host for today. Let me give you a small brief about India Factoring and the company. So, India Factoring and Finance Solutions Private Limited is a market leader of factoring services in the Indian markets. Backed by a strong team of domain experts, the company delivers customized receivable management solutions to businesses across India. As per FCI statistics, the company has been ranked number one in India for 8 consecutive years, number two in Asia, and number four globally in export factoring. Established in December 2009, it enables enterprises to optimize the account receivable management through integrated solutions covering financing, collections, and credit protection with particular strength in export receivables. The company operates under the regulatory framework of the Reserve Bank of India as the licensed NBFC factor and an 83 category dealer. It is a full member of FCI, the world's leading association of factoring companies, comprising of over 400 members across 90 countries. India factoring work has been recognized in multiple local and global forums, and it is winner of various prestigious awards, including FCI Best Deal, Great Place to Work since 2020, Diversity, Equity, and Inclusion 100 by EY, Best Brands 2024 by ET Edge, SME Finance Forum Award, finalist since 2022, FCI Marketing Award since 2023, BCR International Factoring Provider 2022 and 2023, to name a few. Today, we have the privilege of speaking with Mr. Duarte Pedreira, a global leader in transaction banking and trade finance, who sits at the intersection of cross-border payments, emerging market liquidity, distribution, and financial inclusion. Mr. Duarte, thank you for joining us today. I look forward to exploring not only just where the trade finance stands today, but where it is heading in the next decade.
That's my pleasure entirely, and thank you so much for having me with you. And a big shout out to India Factoring to start with. Obviously, you're taking your pioneering role very seriously. I'm also delighted to say that the FCI, which is a huge partner of TFCOP, where I'm the chair, has played a prominent role in our coalition. And to bring all these aspects together is an absolute privilege for me. So thank you for the opportunity.
Thank you for your kind words, Mr. Duarte. So let's begin with a big picture. The question number one is the trade finance gap fundamentally a capital problem, a risk problem, a trust problem, or a distribution problem, according to you?
Goodness me, that's a very good question. What a way to start. I would dare say that it's a combination of all. The biggest problem we have, Kaustubh, is that the capital is concentrated in the global north, and it needs to get to the global south. And at the moment, I think it is pretty consensual that it is not flowing at the pace that we want it to flow. The global south is where the SME financing gap is mostly located, the trade finance gap as well, the infrastructure gap. And that's for a simple reason, because the flows and the capital stock that is concentrated in the global south is simply not enough to fulfill that demand. So capital needs to flow from the global north to the global south in order for that to happen. Now, risk is a big part of that, but I've spent a lot of time in my career trying to demystify the concept of risk. And Kaustubh, I think you would agree with me that there is one thing which is data-driven factual risk, and the other thing that is completely different from that is the human nature of fear. And fear naturally drives a different phenomena, which is risk aversion. And what I mean by that is very simple. For example, the SME financing gap is there and it occurs mostly in the global south because whenever we say that we have a financing opportunity that involves an SME in the global south, regardless of how well structured and risk mitigated the opportunity is, the recipient of the message or the request is lost when we say that it is an SME somewhere in the global south. So that is risk aversion as opposed to factually data-driven risk. And that is driving people away from SMEs and global south
Well, well,
financing.
well, that's an interesting
And
point.
trust ultimately
Well, that's an
the risk aversion drives everything. So effectively, just to finalize the point there, distribution is therefore dominated by a concentration on the very same assets. Everybody is doing the same thing, and that's why the gaps are there. You know, if all the financiers are just focusing on underwriting the same risks, then how do we expect how do we expect funds to flow where they're most needed? So the coalition that I created and that I'm very proud of, that's been skyrocketing over the last 18 months to 2 years, TFCOP, is assembled precisely to change the status quo there. And I think we are absolutely on the right path.
Let me build upon what you have said, Mr. Duat. The global finance gaps is still measured in trillions. Are we defining the problem correctly, or do we need to distinguish more clearly between the SME trade finance gap and the emerging market forex and liquidity gap?
No, we're not measuring the problem correctly, and that's actually something that stemmed out of the TFCOP experience. So, by the way, just for context, because I'm not expecting every single one of our viewers to know what TFCOP is. TFCOP is now the largest coalition ever set up in financial services to eliminate the SME financing gap, and it is the largest coalition because it brings together 5 different industry bodies, including the FCI, which are a prominent member, but also BAFT, the ITFA, Bern Union, and ICESA. But on top of that, we have 13 multilateral development banks from all over the world, alongside some of the country DFIs, that help us and back us in these efforts. Now, within the work, and of course a number of members of the private sector, which are absolutely critical. Now, the critical evolution of our thinking actually led us to identify that in our quest to solve the SME financing gap, we had to actually think a lot in a much broader way. Why is that? And you and I alluded to this when we had a previous call. It's very simple. SMEs don't really get financed in hard currency, do they? So, India factoring, unless you're supporting the exporters, you're not really going to denominate your funding in local currency. So one could say that 8 out of 10 beneficiaries, SME beneficiaries of financing, would be focusing either on domestic business or on the import market. So quite frankly, the cost base of these SMEs is local currency denominated. The income base is local currency denominated. The financing is local currency denominated. So we must move away from this concept of saying, oh yeah, we're going to solve the problem just by throwing dollars and euros at it. that doesn't really work. It is a local currency denominated problem, and we need to come out from, especially those of us in London, New York, Abu Dhabi, Dubai, and Singapore, just to name a few. We need to come out of our high horses thinking that the problem is sitting with the money that we control. It isn't. So that then generates another issue, and the issue is very simple. If we agree on the postulate that we need to move capital from the north to the south, and if we agree on the postulate that the problem is in local currency, how are we going to convince the lenders, investors, and so on in the global north to come into local currency denominated structures in the global south if they are going to adopt or take FX risk? Because let me tell you the hard truth. There simply aren't deep enough FX derivatives markets that can allow external parties to hedge their positions in non-G10 currencies. It's impossible. So that then uncovered that parallel gap, which we call the FX gap. And one cannot live without the other. So if in the absence of scalable local currency liquidity and hedging, we will not achieve our goals. We will not provide more meaningful access to these SMEs that need it so much.
All right. So we have one of the questions here in the chat box. The question is, does the industry systematically overestimate emerging market risk because we lack the right data and structure and credit enhancement mechanism?
Yeah, absolutely. That's without a shadow of a doubt. The entire, and I've been fairly controversial within my banking peers, and those who know me well know that I have no anxiety whatsoever in being controversial or to speak my mind. The problem is not the risk itself, is this risk aversion. If I'm proposing a transaction that is extremely well structured, okay, let's use an example that I often use, and it's quite interesting because I'm Portuguese, and Portugal has not lost, but drew with the Congo DRC yesterday in football, which was a very well-deserved point for Congo DRC, and I'm very happy for my brothers and sisters there. But the point goes that if I tell you, Costa, that I've got a really well-structured SME transaction involving a player in Congo DRC, which happens to be an SME, but their business model is, for example, importing medicine to deliver to the local UNICEF, and the financing is derived from those receivables. I've lost you the moment I said it's a small company and that it sits in Congo DRC. So it's not about the risk; it's the risk aversion.
That's an interesting point, Mr. Duat. What is still preventing receivable, supply chain finance, and exposure, and other trade finance assets from becoming more liquid and widely accepted asset class?
Well, quite a few things, if I may say. I mean, one of them is that we need to reduce the risk aversion by creating certainty, and that's the overarching topic, I think. Right. So we need things like standardization. We need and standardization. What I mean is, for example, tell me from your experience. Now we turn this into a more interactive thing. How do you go about analyzing an SME client? In India is fairly advanced, is cutting edge from the technology, the registries, the repositories that it's got. But if you cross the border into a neighboring country, regardless, choose one. How are you going to identify the parameters that drive these SMEs?
That's a good question, Mr. Duat. So at India Factoring, we have TCI, that is Trade Credit Insurance,
Mm.
and trade credit insurance backed data are more or less updated one, and they have the entire data of the transactions, the turnovers, and the revenues of the companies.
Exactly. So I rest my case. And I've said I'm not surprised because I'm a huge fan of the Indian financial system and the way in which you operate, which should really and has been replicated, or people are trying to replicate in other parts of the world. But the reality is, and you've captured everything, you use some sort of standardization to drive your decision making. And and that is really really important because ultimately this risk aversion means that investors, if they can get past the risk, the fear, but still that they're struggling to understand the underlying risk, even if they weren't risk averse, even if they were you, Kostuv, or me, Eduard, they they would still struggle to understand, right? So when so I used to run a bank in Angola on the transactional banking side, and I would normally say, okay, how are we going to go about assessing our clients? And people would say, my risk colleagues would say, oh, get audited financial statements. And I would start laughing uncontrollably because in Angola at that point in time, we may have maybe 20 companies that were audited. So what are we going to do? Just exclude everybody else? And then they would say, no, 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 bring me the fiscal accounts. And I start thinking, okay, but the fiscal accounts are designed, and no demerit to Angola, it happens unfortunately across the board. But fiscal accounts are designed to undermine profits so that people can pay less tax. Again, India leads on this front because of the open banking and so on, so it doesn't allow this evasion. But in reality, that's not yet disseminated in all the markets. So what is my real source of information about the company? It's an Excel spreadsheet that is run by the owner, and that's where the real numbers are. Right? But how can I generate sufficient confidence from something that hasn't been verified by anyone else? So again, standardization is really, really important. And we didn't need scalable infrastructure to aggregate, to verify, to rate, to insure, and to distribute the assets that we're generating. And for us, again, bringing TF Corp into the equation, our mission is to think laterally with all the different participants in the coalition to make this happen and create more access to SMEs into the eventually lending product suite that I believe that we can offer.
While Mr. Duat, you mentioned about technology and digitalization, we have a very good question here from one of my colleagues. We have digitalized parts of trade finance, but access has not changed enough. What can digitalization make? Where can digitalization make the difference? Is it origination, documentation, risk assessment, monitoring, distribution, or enforcement?
You know what? I was last Friday. I had the privilege of hosting and actively participating in what was an outstanding gathering, which is called the TF Corp Task Force Open Meeting, and it was held at the European Bank of Reconstruction and Development, which are a key member of TF Corp. We had some really interesting participation and contribution from everyone. One of the panels was around digitalization, and it was actually managed by my dear friend and TF Corp colleague and industry colleague, Shona Tatchell, who is a clear leader in this area. But she was then joined by other undisputed leaders in the digitalization agenda. And the common theme of the panel was that whilst maybe 5, 6 years ago we were all really excited about the technology itself, nowadays we are a lot more pragmatic about the problems that the technology is trying to solve, but more, even more about the way in which we are trying to solve it. So, Costa, the homework question is, if I all of a sudden create a web browser, let's call it duartepedreira.com, and I send it to you, and you as a friend very graciously will agree to try it on, well, let's be honest, 5 minutes later, you would have forgotten about it and started using Google or Yahoo or whatever again, right? Or Bing. So the point I'm trying to make is that people are creating all of these platforms, but they are forgetting about a critical factor, which is the interoperability of the platforms. Because it's all well and good for you and I to go out and create yet another platform to bring borrowers and lenders together. But we could convince the borrowers to come in, but then we couldn't convince the lenders to adopt it because everybody's got their own platform. So unless there is interoperability between the solutions, that will never happen. So what is the critical thing about digitalization? Is enhancing and making access more efficient and faster to, especially given the topic of our discussion so far, SME lending, right? So what we want to make is create the possibility of creating scalable SME lending driven by technology. So digital origination, data capture, quality of data can change the world. But that is only one part, because if we don't solve the interoperability issue, then we will never get full adoption. And we will just carry on this endless stream of failed technological platforms that unfortunately are creating a really large graveyard in our industry. But the most important thing is to act to mitigate the risk aversion, as I say. And that is really digitalizing things like data to assess better risk, to better assess risk, and so on. But the dispersion of the digital agenda is still a really critical problem.
So, Mr. Duarte, let me build a little more on the technology and the digitalization part. So, what do you think? Will the artificial intelligence simply make existing trade finance process faster, or it can fundamentally change how SMEs and emerging market risk is assessed?
And the short term, it will make things faster. I mean, I started as a skeptic of the artificial intelligence agenda. I was perhaps a little bit too focused on the scientific fiction movies that we all see and all these different things. But now I'm an avid user. And what am I an avid user of? I'm an avid user of things that make me more productive. It is incredible how a presentation, for example, that would take me an entire day to put together can be put together in a matter of minutes to outline a point that I want to make. It saves me maybe 7.5 hours in terms of doing the job, point to point. So what does that free me up to do? It frees me up to focus on the decision making. Reason I'm telling you this background about how I came to utilize artificial intelligence and the drivers for me using it is very simple, because there is a parallel there with our industry. AI needs to be seen as something that is there to serve us, and I know that there's a slight pun in the terminology because there's an AI agent called Copilot, but let's forget that for a second. My analogy is that the human personality will continue to be the captain, and the AI becomes the enabling co-pilot. And I do believe that then the right use of AI can have significant impact, particularly on those things that we were focusing on around credit assessment, for example, better understanding of, and in the SME area, better understanding of the SMEs. Standardization needs to be fed into that AI way of thinking. But ultimately, Causto, is about reducing or eliminating, if possible, that risk aversion that is that
Uh,
common denominator to the entire
So,
SME
Duart, we have a
financing
question
agenda.
from Gaurav Patel. So what is your view on what major trade trends will completely catch business off guard in coming years?
Very good question. Thank you. Um, Local currency financing.
Would you
No,
like to?
no, come to London, come to New York, come to Dubai, come to Singapore, do a roadshow with me, and see how many people in the ivory towers actually understand that the problem is local currency. Do you know who understands that? The United Nations. They, through the Finance for Development conference that took place in Seville last year, and very much aligned with the TFCOP goals of turning the SME trade financing gap into a sustainability issue, they said that the MDBs should be leading the way, and that the gap was the real sustainability issue, aside from green, obviously. But the reality of the fact there is that people are not moving fast enough. The MDBs are, right? So where people will be caught off guard is when the world finally catches up with the concept that the opportunity lies in local currency. The opportunity lies in creating FX derivatives markets for non-G10 currencies to then funnel the supply of funds into the demand side. And I do believe that many people will still be going and having that eureka moment that we had maybe 2 years ago and say, "Ooh, so it's not all dollar and euro and sterling and whatever denominated. What's happening here?" And the rest of the world would have moved on.
So, Mr. Duart, this is a personal question that came to my mind.
Sure.
Uh, the Trade Finance Conference of Parties has deliberately moved towards sandboxes and practical pilots. What makes a sandbox credible enough to attract banks, insurers, and public sector support?
Very, very good question. Thank you for that. It's very simple. So let me explain the concept of the TFCOP task force first. So the TFCOP task force is the mechanism that runs the Trade Finance Conference of Parties. So Trade Finance Conference of Parties started in 2024, where we had TFCOP 1, which is a summit. Then we created something, and this was held at the IFC in Washington, D.C., and we issued the Washington Declaration on the back of that. And the Washington Declaration says we will eliminate the gap by 2040. We will make the gap a sustainability issue. And the corollary of this was that we would create an executive body that would actually execute our agenda between TFCOP meetings. So what is happening there? So we set up this TFCOP task force. In fact, On the 3rd of July, the day that this Finance for Development conference in Seville came to a close, and we were also in Seville, quite symbolically. And the TFCOP task force houses two different streams. One is a stream of working groups, which I call the think tank. And we've got different working groups operating at different levels. One is obviously FX, which is now that we've identified that we don't just have one gap, we've got two, and we're operating at two twin gap levels. We have to deal with it head on, and we are doing that, and I'm very satisfied with where things are going. And I can't openly say too much about it, but it has become a global policy issue underwritten by some of the major policymakers in the world. And that's a big matter of pride for both myself and the entire TFCOP community. Then we've got different other working groups around regulation, sustainability, insurance, Africa as a focus region. Coming to the point that you're raising about the sandboxes, the other side of the TFCOP task force is really what we call the incubator. And the incubator was set up because my words that I believe resonated with a lot of people that joined this TFCOP 2024, the first TFCOP meeting. My opening remarks said, we are not here to create another talking shop. The gap will not be eliminated just by us talking about it. We need to move on from that, and we need to start creating action. So as a corollary of that, we created an incubator, and the incubator is, as many other incubators out there, the forum through which people, members, non-members, come together to create specific sandbox projects that are targeted at eliminating the SME trade financing gap. And my commitment as the chair of TFCOP is that by the end of this year, we've got at least 10 working sandboxes. And we've got a pipeline that is very extensive. For example, at the moment, we're working hard, and this will come close to you as well, because you have this in India. We're trying to create with a company called MonetaGo. It's their sandbox. A lot of kudos to MonetaGo. An invoice registry in Nigeria to prevent double financing and so on. In essence, this will augment the access to SME financing by reducing the risk aversion. There's capacity building programs. I personally delivered together with Hanan Naba, the TFCOP Task Force FX working group co-chair of the Africa working group as well, and together with Simon Cook, who is one of the legal partners of TFCOP. We led a seminar, a 2-day seminar in Rwanda for the entire banking system to enable them and empower them with knowledge about trade, supply chain, factoring, and so on. My own sandbox is I wear multiple hats. Obviously, TFCOP task force chairmanship is quite important, but I'm also the global head of lending for Crown Agents Bank, which is an institution I am extremely passionate about, that I joined 10 years ago. I'm one of the refounders of Crown Agents Bank, and that's a big badge of honor for me. We just focus on bringing prosperity everywhere we work. And within that, what I want to do is the very first local currency denominated SME loan securitization program in one of the global south markets. Funded by who? Funded by the development banks, because the big role that the development banks have is in catalyzing capital into the jurisdictions where perhaps the private sector has struggled to come in more efficiently.
So good to know that your thought on this. I'll also like to mention that even India Factoring and Finance has been associated with Monetago recently for our operational backend procedures.
That's really good. Monetago, Neil, and Ian, and so on, are an example to us all, and precisely the type of example that we want to have within within the industry. So this is something that is obviously very close to our hearts. Um, and the fact that they're spearheading an entire sandbox is not short of incredible. Just to give you an idea, when we had the sandbox presentation at the Central Bank of Nigeria, um, we had about 70 people in the room to engage, to participate. TF Corp is a community. Marissa Lee Gimple and she's a dear TF Corp member and supporter. She was saying last Friday as well at this open meeting at the EBRD that trade finance is a team sport, and that really resonates with all of us. We are a community.
We have one more question in the chat box. Where can blended finance be more catalytic in trade finance? First loss protection, guarantees, local currency funding, liquid facilities, or market infrastructure?
That's a really good question, and thank you for putting it across. In the context where we move the dial into some really simple postulates, because from a historical background, people kind of had a PhD on defining the gap and saying, oh, it's lack of dollar availability. It affects SMEs the most. It affects the global south the most. And everybody knows that it's either 2.5 trillion from the cross-border perspective or 5.7 trillion, including the domestic flows. Everybody's got a PhD on the problem, right? But when we started focusing about solutions, then the problem definition changed because no longer a hard currency scarcity issue, and quite frankly, it moved the boundaries around this risk aversion that we've identified. Because bringing in the MDBs in particular, and that's why we have 13 of the most representative MDBs within TF Corp, is absolutely critical. So blended finance is now a topic that is one of the most discussed topics and actionable topics in the industry, and I'm very pleased to see that. But and again, interestingly, we also had a panel on blended capital in this last event, and the common denominator was blended capital cannot just be a transfer of resources. It needs to attract new capital. So the whole point about the MDBs and philanthropic capital and so on is that they can be the seed to then generate additional capital from the private sector. So first loss guarantees and protection and so on can indeed, if underwritten by this concessional capital, facilitate more access to SME financing. But of course, local currency and liquidity facilities can directly address just one or one of the most persistent barriers in the global south, right? So it is absolutely critical that we also need to solve the FX gap, because to give you an example, I can mobilize as much MDB capital and concessional capital into a country in the global south because the MDBs can fund themselves in those local currencies because of their strength. But if I then don't bring in the additional private sector capital, the gap
Due to some connectivity issue, I think we have lost Mr. Duat. Hello, I think there was some connectivity issue.
I did. It's very interesting when you work for a financial institution and all of a sudden your internet collapses, but nothing that we cannot solve. But let's come back to the argument that I was making, which ultimately is that we need to generate additional sources of capital. And the MDBs and the concessional capital can come in, but if we don't bring along the private sector capital, then we're back to square one because blended finance will not have achieved its goal. So that was the punchline, and someone in the internet world or connection world didn't want me to come to my punchline, so they cut me off. But we are resilient and we came back.
That's great. So, Mr. Duat, what do you think about the geopolitical uncertainties and how is it affecting related to the trade finance gap we are right now experiencing, the multi-trillionaire trade finance gap? And what do you think? How can a country tackle this?
Look, very good question, but I always see these things as opportunities. I think you don't have to look too deep into all the things that I say to understand that I'm a global South supporter through and throughout, right? So uncertainty has a very big push to democratizing or leveling the playing field in access to international trade. And I just want to bring again, of course, given our audience and your very kind patronage, India back into the fore. The India example for me is striking. Why? Because the world was changing, tariffs, conflicts, and in a matter of weeks, we're not talking months, we're not talking years, we're talking weeks, the entire Indian trading ecosystem has changed. And India quickly diverted trade flows away from, for example, from the United States into places like Africa, Middle East, emerging Asia. So, of course, look, I'm not going to be standing here or sitting here, rather, I'm not standing, but I'm not going to be sitting here and telling you, look, it's got zero impact. So when you affect global energy flows and things like that, I would have to be very, very silly to just say, oh, everything's fine. It isn't. But then it's what you do with it. And India clearly understood that there was a problem, clearly understood that it could be solved, and it started diverting its trade flows very, very efficiently. Africa did the same, trading with other counterparts. South to south, flows of trade have picked up. And to me, that is an incredible victory.
I would like to conclude with a practical call to action. The final question is if each institution represented in the industry had to make one concrete commitment to help close the trade finance gap, what should it be?
Number one, everybody should start. And I know it's human nature, right? So we all humans, originators are humans, risk colleagues are human, shareholders are human, directors, exco are human. So risk aversion to say, oh, stop being risk averse would be really, really silly. But risk aversion needs to start being tackled by people actually caring and investing more in that information, that data that can be gathered, can be powerful, can be standardized, and so on. So focus on understanding your client and how you can service your client, as opposed to running away from your client just because you perceive it as being riskier. The second point is really important. The Global South financial institutions really hold the biggest problem in terms of the gap, simply because their asset and liability management determines that they can only lend X to their SMEs. And much like I do in my own portfolio, I've got a portfolio cap. So if I want to go above and beyond the portfolio cap, I need to distribute risk. So there needs to be a bigger emphasis on structuring risk transfer solutions that work. And people will say, oh, maybe Duarte's got a very, very short memory and he just wants us to go back to pre-2008 when all these very funky structures were being assembled and then see what that led to. No, that's not what I meant. We need to learn from the errors of the past. But if we can, for example, securitize and democratize the access to SME loans and generate capital relief for the banks selling the loans into the special purpose vehicles, therefore enabling them to do more business, then I think we're in the game. The DFIs also need to commit. The MDBs, the DFIs, they're so close to me, so close to my heart. They also need to commit, but they did. They are now following the Seville commitment. The entire way in which these MDBs have refocused over the last year or so is just outstanding. Of course, the green agenda is incredibly important. I want to be alive, hopefully, for more years. I want my future generations to be alive to survive in the planet and so on. That is really, really important. But we can't forget also that generating prosperity, especially in those that need it the most, is the best contribution we can give to a sustainable planet. Because if we give education, if we empower people through employment, we will raise that awareness of longevity, or sustainability through longevity. So the MDBs have really started to commit now on things like increasing blended finance, local currency financing, and so on. I think the other part that is often omitted from the conversation is the insurance sector. You've alluded to it, but I do think that insurers need to be a more critical part of the conversation. They need to be brought into a segment that they have never been encouraged to understand. And to me, for example, to see the interaction between the FCI and ICESA is quite heartwarming, because it tells me that the people managing these industries actually understand. Finally, a word on regulators and so on. They need to be part of the solution, not an obstacle to the solution. So I'd like to highlight the role, for example, of the Central Bank of Nigeria in enabling, promoting an invoice registry that will have a meaningful impact. But we need to go beyond that. We need to involve regulators and at the highest level, IMF and so on, in how we're going to unlock this FX derivatives market. We can't just be sitting on a problem where we know where the solution lies to unlock capital to the Global South safely, capital that needs to go into local currency structures, and simply whistle to the side and say, oh, the FX derivatives problem is not my problem because I'm in trade finance, for example, or in factoring, for example, right? So it needs to be very, very different. And the regulators and the industry and so on need to be aware of that. And we need to have that deeper impact on the problems that actually matter. The other one, obviously, is knowing that the MDBs, not just through blended finance, but also direct intervention, are funding themselves in these local currencies and deploying these local currencies locally, How is it that we are not focusing on lowering their cost of funds? The MDBs are there for a purpose, to bridge this gap, this risk aversion. But if all of a sudden they're going to the local markets and financing themselves above the government and at uncompetitive levels, how are we going to enable them to do their concessional financing job? It's pretty important. So I hope that provides you a comprehensive picture of kind of my wish list going forward.
Definitely, we thank you so much for sharing your perspectives and insights with us today. And I'd also like to thank all the viewers for being the part of this conversation. Please feel free to connect over LinkedIn if you have any questions, and feel free to go through the website of LinkedIn page of India Factoring to know more about the structured finance and factoring. Stay updated via LinkedIn, and I'll see you all in the next chat show. Thank you so much again, Mr. Duat. Good day.
Pleasure indeed. Thank you. Good day to you.